Hey, traders in the lazy swing trader service. So here's what I'm looking at in GDX. I started to make an update to send out through email, and then I realized that it's better that I talk through what I'm thinking about GDX. And the reason, or one of the main reasons for the update, is we don't have a first target on GDX. And I want to explain why, and I want to explain my thought process, what's going on. So we look at the daily chart of GDX, and it did what it was expected to do. It's basically in one of these stair step environments where it's going up, it's pulling back. It's making higher lows, which is a bullish sign. So we had a target price for entry on GDX, and many of you were in this trade. So the question is, where's the first target and why isn't it on the board? So let me just draw a couple of things out. So here's the stair step thing that I'm talking about. So it's going up. Well, it really went up to here. Now it's pulled back. And this was the entry right here, the latest entry last week. So now, good enough. It's on its way back up. Great. But what are we looking at? Well, the first thing that we're looking at, the first area that it's likely to be attracted to as long as it continues in the northern direction. So the first target would be what? It would be this breakdown candle high right around 36. It comes in at 36.06, so we're using 36 for the conversation. Now, what else do we have up in that zone? Well, not too far away from 36, we have the recent high. It's not quite 37. I believe it's 36.80 something. Let's get the number. It's 36.84. So somewhere in between 36 and 36.84, from a daily chart perspective, we can expect GDX to run into what I like to call overhead resistance. That doesn't mean it's going to stop going up, but maybe it runs sideways for a while. So the quandary is, do we take some money off the table around that zone, 36 to 36.84, in that neighborhood, and then do we say we'll hold for more, we get the best of both worlds, we turn it into a risk-free, emotionless trade, painting by the numbers, that's the proper approach. Now you can see as I talk through the quandary, and it's not really a quandary, I wound up with describing how we would paint by numbers. And what I want to describe here, and the reason to go through this exercise, even though we have a side of us that says, hey, if it's really going to continue higher, why would I take some money off the table? We don't know it's going to continue higher. Anything can happen. So we have to treat this as a business. If it runs sideways around 36, we can re-engage the half or whatever portion you took off. But the reason to go through the exercise is to describe how we do it, and the fact that where the numbers are is less important of the fact that there are numbers that will A, attract price, and B, be resistant to price. So we're likely to get at minimum of a stall out for at least a day or so. Whether the numbers are 4% away, 7% away, 12% away, the numbers are what they are, and they're likely going to have the impact that they normally do under garden variety market conditions. So this was just a little tidbit inside my head for GDX.